Hey guys, here we are back again. Another video. My favorite market Nasdaq and favorite time frame 2 minutes. So I'm shorting here. So this area here been tested several times. So according to the 1 hour analysis, this is the perfect entry. I put another order a little bit beyond. I'm taking it off. Don't need anymore, so the market's not going back to that area just yet. Now, if I'm gonna move my stop loss, will be all the way down. So there you go. This is the 5 minutes. You can see the RSI is pointing down, and all the volume bars are the several red. Yes, now it's past 10 a.m. US market time or US session time. So this little the momentum is past. We're after the momentum here, so this volatility is not as much as the open of the market the first half an hour, but the first half an hour depends on the day and depends on the news, depends on a lot of other factors. So either you want to be in that time, you know, the window, or not. So I decided to come back half an hour late. After this is the day where we had the 3 major news at 9:30 US or New York time. So let the market breathe a bit, show what direction he wants, fake out, do whatever it is. Let the environment change from the bullish to the bearish, and that's when I came in. That's when I entered the market into the trade. So as you know, I always like my trade take the little profit around the dollar. Otherwise it's more than that. That is always a bonus when it's more than that. So my target is as a reference of this area that I'm expecting the market to reach according to my analysis and strategy, and then I move it accordingly. There is something that you know about me after the past videos that I shared with you guys. I like to go in and out as much as possible. Well, you can ask me why don't I scalp? I do sometimes, but I like to my trades be between the scalp and the day trade. I love that, so I like to spend 10-15 minutes. I think in my personality, in my experience, more you expose yourself to the market, more you open your trade and wait, especially in the lower time frames. You can do that for swing trading, which is the higher time frames. But when it comes to lower one, so always want to get in and out. And that's it, because you don't want to expose yourself to all this market change, environment, all of a sudden, news, whatever. You don't want that. You want to go in, take your profits and out, and get on with your day. If you like that type of style, you know, you want to stay in front of the screen and looking for the opportunities, so be it. That's good. There's a lot of people who do that. But in my style, my lifestyle, I love to come in for maximum. I like that have 45 minutes. Let's include the analysis starting from 1 day a day time frame and go all the way down to the 2 minutes. Sometimes when I scalp, I go to the 3-2 second chart, but that's independent of scalp and the time, and depends on several other scenarios that we'll share with you guys soon. So for now, let's focus on those kind of trades. So there was the high level of resistance and the 2 minute and the 5 minutes. Right now we are back in 5 minutes. So this area of the market went all the way. There's the opening candle. You can see how it's so strong, erected, go all the way up, and then went all the way down. So now the market is covering all this area because it's creating imbalance, and then the market will reach to that level that was supposed to reach at the beginning, but the opening created, the news created imbalance go all the way up, and then the price came in all the way down slowly, and then it might go all the way down throughout the afternoon, the PM, and the US session. So I'm close to New York time, so this is my timing. So here you go. So now I'm thinking maybe a second contract, since the market kind of show that, but as you know, you never confirm a candle until it's closed. So that's the candle now showing it's going up really strong. Of course, remember this is the zone of resistance, previous one, so it is normal that the market will react to this area and then go even sometimes like ranging sideways before going down or going up, depending on the market direction or that. So every support or every support, when it breaks, become resistance, and there is rules around that. So in my upcoming videos, I'll share and explain a little bit more about those resistance and support, and why they call him like support and resistance. So that's another word, like technical word for supplies and demand, and why that turns to be like from resistance to become support or vice versa. It depends on the direction of the trend, if it's like an uptrend or downtrend. So there you go. So now the market seems not going and touch our order what we said, but anyway, it's there. You know, this area you can see that I highlighted the area in the yellow. So this is the area that was expected to be broken. I mean, after the opening, the market went to this area, go all the way up of that area been highlighted, and then now we broke it back down. So my second order is a little bit closer to this area, so the market will reach it, and there's high probability that's gonna go back again once we reach this area. But let's see. Again, one contract is enough. Sometimes I take two, but once usually is one. Here's what I do. Usually one always go one according to the different scenarios. Sometimes I take two. Rare, extreme, I go three. But I always like to release them as soon as possible, and then just to pocket this profit soon. So we don't like the market shift or change the environment and have a three contract, or for some people more. But for me as a retail trader, I like to go just light, and then again just a minimum amount of time that I like to spend in front of screen and trading. So yeah, so once the market is gonna go beyond this area, now I will start to take off my order. So then we'll bring my stop loss all the way down. So let's see what's going on. So this candle is created there. There is balance and decide with the direction you will go. But so the second candle after that, or the following candle, showing the market is in the hand of the bears. So yes, so this is the environment now changing to the bear, went from bullish to bearish. So now there is an exchange of hands, switch of hands, and yes. So now I put my stop loss like a little bit further the entry, and then a little bit in the profit zone. In case the market reverse and go up, that's it. I will exit with a little bit of profit, and something keep in mind that there is fees when you have a broker that you share. I mean, you take anytime you take a trade, you take a little fees on it, and you always think about that when you enter a trade. So you might think that you broke even, but well, the broker is coming for this for the broke even. We're gonna take from your profit or from your account balance, and will show always a minus, and you'll be like, why? I broke even. Well, no, there is fees for the broker. This is how they made or make their money. So again, there is not as much volatility as usual. Nasdaq, this is December, and then December is the last month of the year. There's the momentum on the volatility is strong at the opening and half hour beyond that, and that's it. Depends on the pair, of course. Like some other pairs, maybe USD CAD or GBP, GBPY or GBP USD. So the Forex, Forex pairs are always like volatile and depends. Sometimes even those pairs around this area, they are quite slow. I remember when I was trading Forex. Sometimes I was looking for some funny pairs, like call them exotic pairs, Mexican USD or some Chinese USD, Chinese pair or Chinese versus the USD, and those are high in spread and fees are really like expensive according to the brokers. But mine at the time was really expensive, so just something to keep in mind. So yes, now I'm like, okay, good. So I'm parked a little bit of profits. Like I said, $300, that's the reach I like to, the profit I like to reach. More than that is a beautiful bonus. And now I will go keep on doing that. Just keeping my stop loss, taking it all the way down. Either gonna take the market will take me out with profit, or gonna reach and touch our target. Depends. So now basically what I've done here is I increase the chances against me that the market may take me out, and that's good, that's fair enough. So it's reached an area where the market is gonna reverse a little bit up before going down. And again, I don't like to stay in front of the screen that much. When I do my thing, and that's it. Either I come back in the afternoon or not, maybe to next day. But you can see I did it. I know what I'm doing. Basically, that's it up to now. So the market's okay. There's high chance it's gonna take me out more than the market gonna reach the target at this level right now when I place my my stop loss. So yes, good. So now if I was aggressive, I will take my stop loss down all the way to the opening of the candle. But I said, okay, let's put it in the middle. So it's still gonna take me out again, guys. Strategy, yes. Analysis, yes. And something else is the main thing, most important is, as the saying goes, know thyself. Know who you are, what style are you, what type of personality, what do you want from trading. You can see this is why I like the Bollinger Band, because the market always reaches areas of this, the curve for me is a print as the market uses. Like people say, oh, okay, what do you put that, too much indicators. Well, yes, you need that. I use that as indicator. You see, this is the area, it's created the neck, and this the market will react to it. So usually, the target will be around that. Anyway, guys, don't forget to subscribe and hit the like button. Thank you very much. Talk to you soon. Take care for now.